Ladies and gentlemen, welcome back to another Bitcoin video. Bitcoin has seen a bearish monthly candle close. We discussed this in the last video we did. If you are not aware why the monthly candle close was bearish, I'll explain it to you right now. We closed below the 21 EMA on the monthly chart, the blue line, forming a bearish engulfing candle and an evening star candlestick formation where you have a green candle, a doji candle, and then a red candle. Both of those bearish candlestick formations have been formed after a rejection from the red horizontal resistance line on Bitcoin there on the monthly chart. So you can see that red horizontal resistance line, which sits at around 29.1k or somewhere around there, probably 29.3k actually. That is lining up, right, with what we've seen in the previous cycles. In every cycle, we seem to form this kind of horizontal red resistance line. Well, it's red because I've made it red, but it's a horizontal resistance line mid-bull market that we bounce off one time before losing, right? We bounce off one time before losing. We bounced over here. We bounce off one time before losing it, right? That is a kind of trend that's occurred now. It's the third time it's happened. Now, the problem is, right, that line is a very strong resistance. It acted as resistance very strongly here in 2015, 2016, acted as resistance here in 2018 before blasting above it, and then it acted as resistance right now after a rejection and three candle closes, right below it there. So, what we've seen now is that red line act as resistance. We've seen the monthly candle reject from that red line. We've seen a bearish engulfing candle form from that red line. We've lost the 21 EMA, the blue line, which is also very important. If you just look at the screen here, you can see every time we've interacted with that blue moving average, it's actually very, very major. Getting below it and getting above it leads to massive directional moves in the direction that, corresponds to the way we broke above or below it. So if we break down from that blue line, for example, 2018, that moving average there, we move through quite rapidly. We move above it, we move through quite rapidly. So the fact that we've gone below that 21 EMA after rejecting from the red line is bearish. And this is where I'm getting into in today's video. So yes, there is reason to be bearish on macro. I don't think it's enough reason, okay, to be bearish in general on Bitcoin, okay? And now, look, I say bearish on macro. What I mean is that there is an argument to be made now that there is bearishness on macro. I'm personally bullish on the macro because I'm a believer in four-year cycle theory. I do understand, however, that there's no significant evidence to suggest that Bitcoin has to do anything in particular between now and the halving. What I mean by that is the only requirement for the four-year cycle to still be active between now and the halving is for Bitcoin to not drop below 15k. It can do anything else between now and the halving, which means, we could go wherever we want on Bitcoin, wherever the chart suggests. But I still think, okay, that it's unlikely that Bitcoin actually goes much lower than anything like 24.3k. I think it's unlikely, even though it's technically possible, and it technically would fall in within the realm of my predictions, which is that Bitcoin is going upwards on a macro scale as per four-year cycle. I still think that it's actually unlikely Bitcoin drops below 24.3k. And I'm going to tell you why. There's many, many charts I'm bringing up here. These are charts that many people aren't looking at, many people aren't telling you about, right? It's the facts, it's the reality, it's the objective data. What I am seeing on Bitcoin is bullishness, hidden bullishness, okay? Now, we could go downwards further, okay? But as I said, I don't think that a drop further would take us below 24.3k. I think if it did do that, that would be bearish, okay? Here's why, okay? We can start off with, for example, this chart here, the Gaussian channel on the weekly chart. So, number one, Gaussian channel on the weekly chart. Now, you guys might be familiar with the Gaussian channel. If you look at the Gaussian channel, it is comprised of three moving averages. There is a thick moving average in the middle. That is the main line of the Gaussian channel. It's what I call the center line of the Gaussian channel. If you look on the weekly chart, you will notice something about the center line of the Gaussian channel. Every time we move through the center line of the Gaussian channel, okay, we move through the Gaussian channel. It's very important to note. Every time we move through the center line of the Gaussian channel, we move through the Gaussian channel and generally see an impulse in that direction. So let me give you a couple of examples here. We move through the center line over here. We move through downwards and we crashed. We move from center line here. We move through upwards and we pumped. Moved downwards, we crashed. Moved upwards, we pumped. Okay? Downwards, we crashed. Upwards, pumped. Downwards, crash, upwards, and we should be pumping as per the trend here. Again, every single time we have moved through the center line of the Gaussian channel, which we have done now on Bitcoin, we've moved through the center line, okay? We generally follow through in that direction. Not even generally, every time. So, that's a lifelong trend that Bitcoin has had, right? It's a trend that's occurred 6 or 7 times, lifelong trend. And that trend is activated now. We should be moving through this Gaussian channel to the upside. Now, there's no time frame Look, for example, over here in 2022, right? We moved through the center line. We bounced around for months. We bounced around from January all the way through to April. 4 months of bouncing around. Actually, 5 months of bouncing around before we finally moved through the Gaussian channel. We moved through the center line over here in March. It is currently June. This is only 3 months in. If it's anything like 2022, we could see another 2 months of sideways, even downwards. So long as we're maintaining within the larger Gaussian channel, the trend is still active. And the trend is we should be moving through it. So that's number one, right? Now, these charts are showing you something, right? And there's a premise in all these charts that I'm showing you. I'm going to show you more in a second. The premise is we could move downwards further, but we still probably should be moving upwards. Okay, that's kind of the premise. So, another chart. Let's look into it. Okay, weekly chart. What do we have on the weekly chart? Well, this chart's basically just showing you where all the support lines are. Support line. We've got a descending wedge formation. What is a descending wedge formation? It is a downwards trend, but it is a pattern of continuation. When you have a descending wedge formation, generally speaking, you move upwards into it. It is a corrective formation, but it generally leads to a continuation to the upside. So even though we're in a downwards trend, which means we can go downwards further, we should be moving to the upside. Again, playing into that whole premise. Even though we can go downwards further, and we certainly might, we will eventually probably move to the upside again. What more about the weekly chart can we discuss? We can discuss the major supports we have. We have the bull market support band. We have things like the 200-week SMA. We have things like the weekly Gaussian channel, which we discussed before. These are things that cannot be disregarded, and they are all at, different levels between 24.3K, which is our low point, and the current prices. So not only do we have a descending wedge formation, we also have support layered support going down to 24.3K, with 24.3K itself actually being a support zone. Moving forward further, we have the monthly charts, okay, RSI, and the monthly chart RSI with the 14 moving average applied to it, the yellow line there. Now, we've spoke about the monthly chart before. Everyone's saying the monthly chart is super, super bearish. I actually disagree. I think that the monthly candle close was bearish, but I don't think the chart itself is bearish, because when you say something like the monthly chart is bearish, you're encompassing everything in that statement. I don't think everything about the monthly chart is bearish at all. I actually think it's not that bad. If we're looking at RSI, okay, what we can see is that 14 moving average and the RSI line sees crosses, bullish crosses and bearish crosses. The red circles are the bearish crosses, the green circles are the bullish crosses. We saw a bullish cross back here in 2015. We saw a gain of 5,700%, okay? We saw a bearish cross here, 79% loss. Bullish cross over here in 2019, 228% gain. We saw a bullish cross over here in 2020. We saw a 550% gain, and a bearish cross here in 2021, a 38% loss. Now we have seen, right, in I think February this year, another bullish cross between the 14 moving average and the RSI line. Generally speaking, right, not generally speaking, every time it's happened, the last 3 times it's happened, we have seen major moves to the upside. That is bullish, right? And there's no invalidation for it, okay, until we see a bearish cross. So again, it plays into what I said before. We can move downwards further, and it would still be bullish, and it would still indicate we can go upwards. As long as we're above the critical levels, such as 24.3K, it's still bullish. Moving forward, another chart here. Now, I don't really like the golden crosses. I don't really like death crosses. I don't really like moving average crosses. I don't think they're particularly important in technical analysis. That's just my style of analysis. I also think that generally speaking, when you see crosses, there's other structures that would have predicted it better than the cross anyway. For example, over here in 2018, we saw a bullish cross, but overall we were in a descending triangle formation. So was it the triangle that broke, or was it the bearish cross that drove us downside? Again, we can speak about over here in 2022, we saw an ascending channel formation. That's a bearish formation. And everyone points at the cross here, the death cross, and says, oh, the death cross dragged it down. But, like, who's to say it wasn't the ascending channel formation that dragged us down? What I'm saying is, generally speaking, the crosses themselves might just be indicative of other structures that are other underlying structures that are forming, rather than the crosses themselves actually dragging the price down or upwards. But regardless of all that, they are bullish or they are bearish or bullish, depending on what they are. Death crosses are bearish, golden crosses are bullish, and that's because even if they are, indicating that there's an underlying structure that is bullish or bearish, and it's not actually the cross itself that does the damage or the gain, there still is the underlying structure. And so the fact that we're seeing, okay, a bullish cross, a golden cross, coming in rapidly here on Bitcoin that will approach from the next couple of months means there is an underlying bullish structure, and means Bitcoin probably will pump. So again, we can go downwards further, because bullish crosses, they don't get invalidated at particular price points. They get invalidated when they don't happen anymore, when the direction of the market shifts enough for the lines to turn away from each other, which isn't going to happen probably, okay? So we can go down further, but we will still see that golden cross, and it will still probably cause a pump. That's another chart, adding to the already extensive list of charts that indicate that we will go upwards even if we see more downside price action, okay? Is the weekly chart again, and this is the stochastic RSI on the weekly chart, a very important thing, a very important indicator. Now, let's just zoom in to the last couple of years, because you can zoom out all you want and you can look at all the price action, but it's all pretty much the same. Generally speaking, okay, when we see a bullish cross on stochastic RSI, okay, it leads to upwards price momentum. December 2018, bullish cross, upwards price momentum. Okay, over here 2019, a couple of bullish crosses, invalidation. That didn't work. Okay, over here, bullish cross, upwards price action. Bullish cross, upwards price action. Bullish cross over here, upwards price action. Yes, we had a couple of invalidations, but ultimately we did get the end bullish cross. Bullish cross over here, upwards price action for a period of time of 4 months. Bullish cross over here, upwards price action for a period of time about a month and a half. Bullish cross over here led to the massive Q1 spike, and we are seeing a bullish cross come in again. Now that could not happen, okay? We could see downside price action, which would drag both the blue line and the signal line, okay, on the stochastic RSI downside further. So we could go downwards further in price action, but ultimately we will see a bullish cross, okay? And that will probably occur, right, before we reach 15K, which is all we need to maintain for the 4-year cycle to be active. And so this chart as well adds to the list of charts, okay, that could see Bitcoin go downwards further, but still remain bullish. What else have we seen? And this is kind of unrelated, but I do want to talk about it, okay? S&P 500. Everyone's saying traditional market's going to go down. Everyone's saying S&P is going to go down. Nasdaq's going to go down. Guess what, guys? S&P 500 has just broken out of a ascending wedge formation that it has been seeing since September 2022, right? Almost 9 months of ascending wedge, a very bearish structure, has broken to the upside. We've also seen, I believe. Let me go ahead and try to chart it up. I think it was something like this. Let me actually find the line here. It's something like this. A resistance line on the S&P 500 on the RSI is also broken to the upside. That was also something like an ascending triangle. That's broken to the upside, which is bullish for the S&P. So I want to just cover this briefly, and I will talk about it more in following videos. But overall, even the whole basis of the bearish argument, which is that traditional market's going to drag Bitcoin down, is falling apart as well. Because the S&P's been bottomed out, guys, for like 8 months now. And it's just broken a major ascending wedge to the upside and broken above the nearest local resistance at around 4,277. So, really, what is the bearish argument at this point? I mean, come on. Look, as I said, and this is kind of a topic of the entire video, we can certainly go downwards further, all right? And there's no real limit to how far down we can go so long as we don't go below 15K, as per the cyclical theory. But even if we go downwards to something like 24.3K, right, the charts are still bullish. In order for any real damage to be done to Bitcoin, this is the overarching point of the entire video that I've tried to make. I'm sorry if it's sporadic, I've been rambling quite a bit, but the overarching point is this. So long as we're above 24.3K, nothing has really changed in whether Bitcoin is macro bullish or bearish. It's still macro bullish because all these charts that are objectively true still exist, right? So 24.3K is really the major level. Anything in between, anything above 24.3, we're looking pretty golden. Start dropping below that, that's when the bearish arguments actually become something that's, more than just a fantasy. That's when it's really started to get confirmed in the charts. Now, I'm not saying you can't be bearish. You can be bearish because you can always speculate on things. But that's when it becomes supported by data. Once we lose 24.3K, we're going to start seeing things like the monthly chart look really bad. We're going to start seeing the Gaussian channel center line be lost again, which is going to be very bad, invalidate a very long trend. We're going to start seeing this descending wedge formation break to the downside. We're going to start seeing things like a bearish cross in the monthly chart RSI. Once we lose 24.3K, that's when the bad stuff's going to start happening. As long as we're above that, it still looks fine from a macro perspective. Not even fine, it looks good. So when is the big, I think we're going to hold it, personally. I think we'll remain above it at 24.3K. I think we'll remain above that level. But if we were to lose it, when would it happen? Well, I can tell you right now, FOMC, and CPI are both happening in 11 days' time. If there was to be a catalyst for a downside move or an upside move, it would be around that time period, because that's when all the volatility is going to come to the market. So we could be seeing quite a boring week. All right, I wouldn't be surprised by it at all. I could be wrong totally, but that, if we're looking at what objectively happens around CPI and FOMC, that's when the volatility really comes in. That's when the major moves really kick off. So 11 days from now, if you're bearish, if you're bullish, doesn't matter. That's when you're really looking for the next directional move out of this descending wedge formation, whether it be upside or downside. I believe it will probably be upside, but again, it will just have to wait and see what happens. I think I've made my points very clear. I think I'm very clear about my bias on Bitcoin right now. As I said, and I'll say it one more time, we could go downwards further, sure, as long as we're above 24.3k. I don't think anything's really changed. If we do lose that level, then we can start considering some of those bearish arguments a little bit more. But I still don't even think then we'd be macro bearish, because I think you can make an argument that we're not macro bearish until we lose the 4-year cycle. So, it depends what your definition of macro is. I think we'd certainly be back in a bearish range, and I'd certainly be much more conservative with my trades. We certainly would have lost a lot of the favor on Bitcoin, and we certainly wouldn't look as good, until the halving. But I don't think it'd be macro bearish per se, because what do you mean by macro bearish? Do you mean we're going to go to new lows? Because if that's what you mean, then no, I don't think that. Do you mean that the macro trend has flipped downwards? Well, in order for a trend to flip downwards, you need to be seeing lower lows still, and I don't believe we're going to go lower lows. So, it comes down to definitions at the end of the day, but let's just say, in order for Bitcoin to not look as good anymore, 24.3k, that's your level. Thanks for watching, guys. Hope you enjoyed. Let's get into a few things before we end the video. If you're interested in trading altcoins in the VIP group, we have the pricing on the screen right now. We have what you will receive on the screen right now, 3 to 5 trading plans a week on altcoins. We have currently around 130 members in the VIP group. We've released every single trade we've ever done, right? In the last 2 quarters, every single trade we've ever done, the wins and the losses. You can check our track record there. It's very, very good. So if you want to decide whether you want to join that group, check out the description below. All the information's in the Telegram group. Check it out. We've also got the Bitget exchange, guys. 15% trading fee discount on the exchange for life for signing up using my referral link. Also access to a reward center that grants over 4,000 USD in rewards for completing tasks. Now, there are terms and conditions for that, of course. They're not just giving you $4,000, but it's still pretty bloody good. They've also got a protection fund. They've released their reserves information, 5 times lower trading fees than Binance, non-KYC, everything you really need in exchanges on Bitget. And again, you can sign up using my referral link below. We've got the Crypto Academy course. If you want to learn how to trade, the name actually tells you everything you need to know about it. The Become a Trader 10-unit course, it's in the name, Become a Trader, teaches you how to become a trader, how to trade charts, how to analyze charts, how to find trades. So if you want to learn about that course, everything you need to know is on the website, including the email address, okay, which is on the website as well. And from that email address, if you send us a message, just say, hey guys, I'm interested in the course, we'll send you back a full pamphlet with what the course is, a video walkthrough of the course showing you what it looks like, and also all the payment information as well. Thank you guys for watching the video. I hope you enjoyed it, and I'll catch you in the next one.